please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Ashwani Gujral and Mitesh Thakkar with us for BTST Calls. Buy today, sell tomorrow. Ashwani, you go first. Quite a bit of covering and individual names today. That's been the story. Anything you're backing for tomorrow?
See, first of all, I think the Nifty is now probably in a 10,500, 10,650, 670 type of range. So sooner or later, now that you have one fairly range-bound day, chances are we may get a gap-up opening which does a more expansive kind of rally, because today mid-caps are closing at the high point of the day. So if the damage starts to get controlled there, I think the impact on large caps should also come in. Having said that, Z is a buy with a stop of 558, a target of 575. Bajaj Finserv is a buy with a stop of 5800, target of 6050. And NCC is a buy with a stop of 104, target of 112.
Okay, before I go to Mitesh, Ashwani, what are your thoughts on how to approach Tata Motors? I mean, it's up about 4%, but its numbers are expected tomorrow, expected to be weak. How would you trade that one?
See, the stock is also weak, so any sort of good news, can trigger some kind of a rally. May not be a large rally, but definitely, we can get up to 340, 345. So wherever, the bashing has already happened, like SBI, etc., you will see upside. That SBI has held on to 3.5%, means that, this PSU pullback is likely to continue.
Yeah, remember, Ashwani, you said yesterday that, you don't know what the numbers would be, but the stock should rally. So I think the stock heard you over there. Z actually is seeing quite a bit of rally right now. Just see the intraday chart of that stock. And again, Z post the numbers had corrected quite a bit, but it's building onto, going into closing quite strong and with very aggressive volumes on this one. 566 is what we have on Z Entertainment. So right now, a lot of stocks where there is clearly quite a bit of interest and a lot of these stocks seeing price volume breakout. Mitesh, your thoughts and your stock calls?
So I think nothing much on the market. I think, I have the same opinion that basically we might have this bounce back, which will be choppy, last for another couple of days and head towards 5620 thereabouts. Sorry, 10,620 thereabouts. Coming to stock calls, State Bank of India is a conditional buy. I would want to see the stock get past 256 and then buy. Keep a stop at 251, look for a 265, 266 kind of target. While I would recommend a one STBT call on Bharat Financial with a stop at 1162 for targets of 1138.
Okay, that's Jamna Auto's numbers. Net profit up 33% at 46 crore versus 35 crore. Talking about autos, Tata Motors, of course, comes out with numbers. At 52-week low, the low today was 52-week low, but from there, of course, there's been quite a bit of rally, 4%. But what are we expecting now, Sonia?
Well, JLR has been weak for the last few quarters, and that weakness is expected to continue. So just to give you a sense of how much the volumes have slowed down for JLR, this quarter, the volume growth is just 2.6% for JLR. This compares to 4.4% last quarter and almost 10% in the quarter before. So there's been a significant slowdown as far as the volumes are concerned. On a consolidated basis, we're expecting a revenue growth of around 17%. The domestic business has definitely picked up, so that's something that has looked good. Remember, the domestic volumes have gone up by about 34%. Growth is led by almost a 50% growth in LCVs, almost a 20% growth in medium and heavy commercial vehicles. But the JLR business, as we know, is the main factor for their earnings. 90% of their EBITDA comes from JLR, and we've seen a big slowdown in luxury car sales as well as diesel taxes that have hit UK sales quite a bit. So we are expecting the JLR business to see a profit fall of almost 20% and an EBITDA as well. The margins will fall to about 13.8% versus 14.5% same time last year. I want to just go to Mitesh as well for a quick comment on how to approach this one. Mitesh, this Tata Motors has been a very weak stock. Do you expect any short covering at all, or is this a stock that you would not trade now?
No, I think short covering appears to have started, I think, with that positive news flow. Of course, results can always negate it. But my sense is that I think if the stock can sustain above 310, 312 zone, and it just had an intraday high of 312 half, then I think we might have a stronger short covering, leading the stock as high as which could lead the stock to as high as levels of around 325, 328. So there could be a trading bounce back happening, but I would want to buy it once we see 312 being captured.
Okay, so Deepak, how would you approach a stock like Tata Motors?
It's interesting. I think I think the idea here, excuse me, sir. The problem with Tata Motors is it's so dependent on non-India right now that everything that happens in India, you could have a doubling of the commercial vehicle segment here, and it probably won't affect them, anywhere close to what's happening globally. Luxury car sales, if I remember right, there's also a base effect from last year. We did see a little bit of a bump up in March, so I think much of that plays into growth coming this year. If you look at Tata Motors results, the notes itself take 2 or 3 pages because of their extra commitments on a number of liabilities that they tend to have, and March quarters generally when something surprising tends to come up. So I'd be a little careful right now. It isn't undervalued, but of course it's fallen quite a bit. So it's it's something that you have to be a little careful about. I don't know what exactly to pinpoint over here, but I would actually take positions only after results come.
Like everything, it's been a flat day for the headline index. What it has managed to do is hold on to the 10,500 mark. So we haven't seen any incremental pressure after the last few days. Devin Choksi of KR Choksi joins us now. We also have Deepak Shenoy, who's on the panel with us, and our technical experts, of course. Devin, hi, good afternoon. The stock that's rallying now is Dr. Reddy's. It's up almost about 7% odd. Did you get a chance to look at the numbers, and any thoughts on how to approach this one? Because it's been a big underperformer this year.
Yeah, good afternoon, Sonia. While on one side, I think there is a dip in the sales as far as Russia is concerned. The other side, I think in the USA, they have a margin pressure. So I think if you look at the global market performance of Dr. Reddy, in both these territories, I think either on one side they have significant revenue loss because of the Russia sales drop by about almost 25%. And on the other side, the US market, I think, suffered because of the pressure on the margin for the want of certain regulations, etc. So all in all put together, I think the performance has been subdued. What is expected is, I think, the new launches, which we don't expect before the end of FY19. So to an extent, I think if one wants to look at the company's performance, maybe you can probably see the continued performance in subsequent quarters, unless we learn something new from the management, I think, in given quarters. I would like to think that I think it is going to be more or less a slow performance going forward in subsequent quarters.
Okay, yeah, I mean, big move all of a sudden in Dr. Reddy's. Is it just the market's way of saying, I mean, let's see how much of the bad news is now in the price. Just pull out Cipla's chart as well, because that one's also now making a bit of a move on the upside. In fact, the entire pharma sector is now, look at that move on Cipla, Sonia. We're just discussing Dr. Reddy's. I think still awaiting Cipla's numbers, I think.
Yes. In fact, so what's happened now, I think, Anuj, is that even if you've reported disappointing numbers, the stocks are rallying. I mean, Dr. Reddy's was disappointing. EBITDA margins were under pressure. It was, below expectations. North America sales were down quite a bit. Despite that, a 7% rally.
Oh, yes.
Is it just value buying? Or I don't know.
I don't know. I mean, but all of a sudden, there's big buying taking place in pharma now. Just, you saw the pharma index. Pull out Aurobindo Pharma, that stock, of course, up about 3%. That's Wockhardt up 4%. The one which was beaten down the most, of course, Strides Shasun, is actually going home as the biggest gainer, up about 15% today. Ashwani, is this just a case of short covering, no more, no less?
See, basically, people are watching, how stocks are reacting to bad numbers, and this is a different phase of the market. Nifty next 50 is up about 400 points. So anything which has dropped, 5, 7, 10 days, they will be short covering because the stock fell because bad numbers were expected. So people will cover their shorts once the news is out. That doesn't mean anything has changed in pharma. Just a 3 to 5 day type correction, and then it falls again.
Okay, that could be possible, of course. Devin, I wanted your thoughts on Bharat Forge, post the numbers. How would you approach this stock now?
Well, Anuj, I think if you look at the numbers, probably yes, definitely on the margin front, you are seeing the pressure on the operating cost, etc. But the standalone numbers are not looking so bad as vis-a-vis the consolidated numbers. So I think that gives you a perspective that the recovery in the standalone business, I think, is significant, and probably I think you should be seeing the reflection of that recovery in subsequent quarters. I haven't gone through the complete commentary of the management, but I think whatever little I have captured, I think the confidence level remains, I think, relatively on a higher side. So I would like to believe that probably I think the worst part in the result is already factored in. Maybe I think the price passover to the end customer, I think a little slow process, and that's the reason for which I think this quarter they have suffered. Subsequent quarters, I think they should be in a position to pass it over. That is what we learn. So hope for the better results going forward in subsequent quarters from Bharat Forge.
Okay, well, before we let you go, Deepak, just wanted your final thoughts. Any one or two stocks that you've liked post earnings season this time? Oops, I don't think he can hear us. So let's do one thing. Let's thank him on that note. We have hardly about 10 minutes left for the market.
Oh, yes, I think, really some big buying now in Pharma. We spoke about the index itself. We spoke about Dr. Reddy's, but a lot of other names are surging quite a bit. So interesting, that one, of course, led by Dr. Reddy's, 6.5%. And this is quite interesting, Sonia. You saw reaction on State Bank of India today, and now some of these names after missing earnings are seeing quite a bit of rally. So let's see how much of this is in the price. Could this be an indicator of some bit of reversal in mid caps as well? I think that will be interesting, but we'll find out, of course, as we move along.
Okay, well, this market is definitely separating the men from the boys at a time when there's so much volatility. Just look at the Bajaj Finance twins. Bajaj Finserv has hit a new high of 6,000 rupees today, and Bajaj Finance is almost at 2150 now. So terrific moves coming in over there. Devin, I want to check with you on that, but let me do one thing. Let's get some more market opinion first. Earlier today, we spoke with Andrew Holland, the Chief Executive Officer of Avendus Capital Management, and he says while micros look good from an earnings perspective, it's the macros that continue to be under pressure. Take a look.
It's probably going to be, probably a little bit more brutal before the end of the month. It's when obviously the mutual funds have to realign all the portfolios. So we've been, expecting this kind of volatility. So, it's not going to go away in the very short term. There's lots of offers out there and no real takers at the moment. So, they've had a great run, and, if anything, once all of this is over, there'll probably be some reasonable value. But at the moment, it's not worth chasing it.
Is it just the mutual fund readjustments? Aren't they over? I mean, if they were over, you think the fund leave?
No, you see some worry now that, there's two bits of worry. One, that's still going on. But obviously, you might see some outflows from, some of the PMS funds, which, concentrate in small and mid-cap, stocks. And that's why you're still seeing a lot of offers out there, for good quality stocks as well as, not so great. And I think that's just going to, remain for the next, to the end of next week, really. And then we can, look at the carnage out there and then work out which stocks are looking, more attractive, given that it's just, the offers are just overwhelming the markets at the moment. And obviously, you're not going to get new flows into these funds until things are settled down.
Okay, so what do you do with some of these individual pockets now? Because we are seeing some pockets like FMCG do pretty well. Banks, of course, are a different story altogether. For the rest of the year, how do you plan your sectoral allocation? So,
we think that the dollar remains strong. And obviously, if this trade agreement with China works through, then, that's to reduce the deficit in the US. That's obviously a dollar positive as well. So we think it's, for the next 6 months anyway, it's going to have more volatility in global markets as bond yields rise. And therefore, it's best to hide. And where do you hide? Well, IT will be a beneficiary of a weaker rupee, which we think will go to towards that kind of 70 level. FMCG will obviously be a place to hide, but also you've got good growth there coming through from all of the companies. And the private banks, again, would be the place to hide in this kind of scenario of more volatility and a weaker rupee. PSU banks, which I'm sure you're going to ask me about, you know, I just don't know what to think anymore. I mean, the worst is probably there in terms of all our negativity. But you know, I don't know how to kind of think about how they repair the damage that's been done and actually can start doing some real business. So, you know, whilst there'll be, you know, rallies that we saw yesterday on some resolutions in terms of the bankruptcy laws, that's great, but it doesn't really mean that they can grow their business anymore. And I think that's the thing that we have to look at now, is how are these PSU banks actually going to ever kind of move forward as the economy, because the private banks, the NBFCs, are all taking market share.
You know, housing finance, your thoughts on that? A lot of stocks now seeing big decline, and the biggest ones are also starting to fall now.
Yeah, again, I think, you know, they fall into that kind of mid-cap, you know, slightly larger cap kind of area. So I said, I think just let the dust settle after next week, and then we can go back and look at it. But, you know, I think the shorter-term problem for, you know.
Well, the closing is definitely much better than what the opening was for the market. Metal names in particular are ending at high point. The latest to join the list is JSW Steel. Devin, your thoughts on JSW Steel? Post good numbers, it corrected as normally metals do. But you reckon the correction is over?
I would think so, Anuj. I think on the other side, you are seeing the strong metal commodity prices, and that is giving you the confidence. Indian metal companies per se, I think they are enjoying the best of the time. In most of the companies' case, they are confirming that they don't carry enough amount of finished goods inventory, which means that the offtake is really fast. In such kind of a situation, when your turnaround time also happens faster, I think it's going to be better time. How much it is going to get reflected into higher amount of profits, one will have to see, because it's a commodity which is volatile. But overall, I see the metal commodity space remaining positive going forward in coming.
Okay. By the way, anything to do with autos and auto ancillaries are picking up quite a bit right now. Ashok Leyland is now up almost 5.5%. So big recovery seen over there after the fall over the last few days. You have Tata Motors that is up almost about 4% Endurance, a company that supplies to Bajaj Auto, that one is up almost about 5%. And talking about Bajaj FinServ has hit that 6,000 mark. Devin, from this auto financiers and auto ancillary space, what's your best bet right now?
Well, Sonia, we continue to like in two-wheeler space Bajaj. I think the numbers are suggesting that they are basically going well into the premium category of bikes. So Bajaj Auto remains, I think, favorite of the lot within the two-wheeler space. Within the commercial wheeler space, I think both Ashok Leyland and Tata Motors, they look attractive. Tata Motors standalone performance definitely, I think, is going to be worth watching this time around. So certainly, I think given the correction in the price for the stock, maybe the downside seems to be captured completely, and you could see some better recovery in the price into the stock. So we like both these companies in the commercial vehicle space.
Okay, let's do one thing. Let's wrap up the day's trading action. It's been a mildly positive day. I think the biggest takeaway was that we didn't fall anymore, and we held on to the 10,500 mark.
You know, today was short covering, no more, no less, Sonia. The number of stocks, and if you see the top gainers today are the ones which have been the biggest losers over the last few days. In terms of Nifty stocks itself, I mean, if you take a look at the top gainers today, Dr. Reddy's Lab up about 6%, SBI up 4.5%, Tata Motors up 4%. The only outlier, of course, the Bajaj twins, FinServ and Finance. They've been a league of their own, of course, so both these stocks hitting fresh high. FinServ is also approaching market cap of 1 lakh crore, by the way. Finance already at 1.2 lakh crore, but FinServ also could be a 1 lakh crore market cap stock. Phenomenal story, really. The biggest perhaps of the last decade. Then, of course, Hindalco, Vedanta, so steel stocks, metal stocks in general, Eicher Motors, Maruti Suzuki, Infosys, all at the high point. On the way down, ITC was down quite a bit. TCS, HDFC, Reliance, these were a few names which dragged the market down. Of course, there was quite a bit of recovery in individual mid-caps as well today.
There was actually. So it was not a bad day at all. Mid-cap index was up 0.2%. The advanced decline ratio was solid more than 1200 stocks on advancing side. Bajaj Finance, Bajaj Finserv, we spoke about that. Berger Paints also hit a new high, by the way, today. Almost at 300 rupees now for Berger Paints, so a new 52-week high there. Ashok Leyland made a big recovery, up 5%. Havels did pretty well from the non-index large caps. So did something like a Motilal Oswal. Endurance Technology also had a good showing today, so that one too was up in the green. On the downside, IOC down about 3.5%. Adani Power in the red. HPCL. Oil marketing companies actually took a bit of a beating today. IFCI was down about 0.2% or so. And a couple of these smaller stocks, GVK Power, etc., in the red. But otherwise, it was all green. Big recovery seen in names like Stride Shasun as well, up almost 15%. Just Dial, after a good set of numbers, was up 5.5%. And Jet Airways, ahead of its numbers tomorrow, is up almost about 4.5%. So it's been a decent day for the market. The Sensex and the Nifty closed mildly in the green, led by short covering and held on to its gains. SBI, etc., aided the market recovery. Devin, from the entire of its numbers tomorrow, is up almost about 4.5%. So it's been a decent day for the market. The Sensex and the Nifty closed mildly in the green, led by short covering and held on to its gains. SBI, etc., aided the market recovery. Devin, from the entire list of earnings that have come out so far, anything that you've liked? Of course, we've discussed the auto space, but apart from that, any earnings where you think, there could be more value?
Well, I think the insurance companies in general have come up with a good set of numbers. The last of the lot, I think, has come from the Bajaj Finserv, in which I think the life and the non-life insurance businesses are there. And definitely this company is a leader within the space as far as I think the profit and the profitability is concerned. So certainly I think the insurance business, I think, stands out well. Earlier in the beginning of the season, I think we had the HDFC Life coming up with a good set of number, and even for that matter SBI Life, I think, came up with good set of number, and so is the Prudential Life. But largely we find, I think, more comfort with HDFC Life and Bajaj Finserv, where the life and non-life insurance businesses are progressing well. So key takeaway from this entire result season, I think one sector, if I were to put my bet with confidence, would be the insurance sector.
Oh yes, a big move, of course, in Bajaj Finserv, 6,000 rupee stock. Devin, what about IT stocks?
Well, I think we'll be selective and probably look at some of the mid-tier IT companies which are typically catering to a vertical or a set of verticals. I think that's where the likes of KPITs, or for that matter Tata Elxsi's kind of company would stand. They are niche players in different segment in which they are operating, and they have the larger amount of growth program to talk about. The large cap IT companies, yes, I think they are moving well, like of TCS, etc. They are moving well in the direction of I think the new space, that is digital space, cloud computing space, machine learning space. But I think given the size, they would probably grow relatively slower compared to some of these mid-tier companies. Those they are slightly expensive on the valuation front, but likes of Tata Elxsi would remain, I think, a good stock to hold on into the portfolio.
Okay, gentlemen, thanks a lot for joining us. There has been some relief for the bulls today as the market has snapped its 5-day losing streak. Let's see if any of this lasts. Overall, the texture is still a sell-on rally. But today,
even as JDS's H.D. Kumaraswamy is all set to take oath as the 24th Chief Minister of Karnataka tomorrow, his swearing-in ceremony is being seen as a precursor to the formation of third front in the upcoming Lok Sabha elections, with almost 13 national non-Congress leaders confirming their participation at the event. Rukmini Rao joins us with more details on that. So Rukmini, who all are attending this particular event, and when is the swearing-in ceremony scheduled?
Congress-backed JDS Chief Minister designate H.D. Kumaraswamy will be taking in oath as the Chief Minister of Karnataka tomorrow at 4 p.m. at Vidhan Sabha. And interestingly, we will also be seeing some of the top leaders of regional parties all across India come and join this ceremony. What we've been given to understand is that Akhilesh Yadav, Mamata Banerjee, we will be seeing Mayawati, Chandrababu Naidu, and of course we'll be seeing DMK Stalin and Kamal Hassan. Some of the few regional party leaders will be present, along with Congress's party president Rahul Gandhi and also Sonia Gandhi coming in. In fact, political pundits are seeing the swearing-in ceremony as a precursor to an alliance that could perhaps take on BJP in the upcoming Lok Sabha polls. In an interview to me earlier last month, JDS Supremo HD Devegowda had clearly indicated towards formation of what could be a third front led by Congress, which will be taking on BJP in the upcoming Lok Sabha elections. Listen in.
Decisions taken by the Prime Minister and the RSS, which has already shown their intention, were to sideline the minorities and the Dalits and the backward class to implement the agenda that is hidden agenda. That is the issue which is before all the secular parties, including Congress. Similarly, political parties who are opposed to the present government's ideology or the philosophy and who oppose RSS and the hidden agenda of the Bharatiya Janata Party, all those forces may come together, I'm not going to say today. In another 1 year what is going to happen, nobody knows this. So, Chandrababu Naidu was with NDA. Now he has come out. So tomorrow what is going to happen, I can't say. So these are all the issues. Ultimately, while fighting the parliament election, so many regional parties may join collectively with one national party, Congress, and collectively they will fight.
Okay. Crude oil prices clearly is the top story, and the impact on the Indian markets, of course, has been quite stifling. You have seen the Indian petrol and the diesel prices hit an all-time high. It actually has been a string of 9 days of constant price hikes in the Indian markets, and that, of course, has been worrying. We also have seen the international markets taking a lot of impact from the fact that the US perhaps is proposing new sanctions on Venezuela. This is after Iran, and the supply concerns in the global markets are just about building up, and that is the premium that you are seeing in the prices there. We have seen nearly 22% of gains in the crude oil prices in the global markets. The Indian rupee has declined by nearly 6% in this time. So with both the important factors doing negative, the Indian fuel prices, of course, have been on a rise. It is the petrol and diesel prices, as I said, which have been which are on the rise again. And the government officials tell CNBC TV18 that some decision may be likely this week itself. Sapna Das joins in with more.
A clear view, at least in some of the quarters of North Block, is the fact that probably the way the oil prices have risen, or rather the retail prices have risen in the domestic market, is nothing short of a crisis situation, and consumers are expecting relief from the government. Having said that, they're also indicating that probably measures will have to be taken together, because the rise in the crude prices has been coupled with the fall in the rupee, and this has created a kind of a double whammy impact. Having said that, however, in terms of the key question of excise duty relief, they're very clear that the fiscal impact will have to be kept in mind, and probably this is going to be the view of the revenue officials. The fact that right in the early of the financial year, can the government afford to take a hit of anywhere between 13,000 crores to 26,000 crores, depending on how much the quantum of the cut is and at what time it comes about, if at all. Officials are also very clear that if there is any movement that is likely on the excise duty front, it will have to be accompanied by a kind of a relief on the VAT decrease also by the state government. So now that again is a bit of a question mark. Last but not the least, measures taken together, probably some role will have to be played by the oil marketing companies also in terms of the daily price revisions. This is what we are getting to hear from some of the quarters in North Block. It's a dynamic situation. We have to wait and watch and see what really happens, despite the fact that there are indications that some decision may be likely by this week.
Thank you, Sapna, so much for that. So those are a few options that the government has in front of it to ensure that the fuel prices do not run amok. But let's also get in Anshu Sharma now to analyze the petrol and diesel prices in India with the neighboring countries, and also the VAT in different states of the country itself.
Right, India is heavily dependent on import of crude, and crude Indian basket right now is at $77.04 per barrel, and the exchange rate for dollar is at 68.09 rupees for every dollar. Since May 14, when the OMC started daily revision of petrol and diesel prices, Kolkata has seen an increase of 2.29 rupees per litre for petrol. That is the highest so far. And then comes Chennai at 2.18 per litre for petrol since May 14. And on diesel, if you see that Chennai has seen the highest increase on diesel prices of 2.08 per litre, and Mumbai at 2.04 per litre. And not just the metros that are feeling the pinch of higher petrol and diesel prices. If you see other cities other than the metros, Bhopal is highest at 82.47 per litre for petrol, Patna at 82.35 rupees per litre for petrol, Jalandhar at 82.14, and similarly for diesel prices in other cities other than metros, Hyderabad has seen 74 rupees per litre for diesel. Trivandrum at 73.88 rupees per litre, Gandhinagar at 73.17 per litre. Remember that petrol and diesel prices have the highest component of excise duty, which is levied by the central government, and value-added tax on petrol or diesel prices by the states. Maharashtra has the highest VAT on petrol at 39.78% just for Mumbai, Thane and Navi Mumbai, and rest of Maharashtra at 38.76%. Then comes Madhya Pradesh at 36.14%, Andhra Pradesh at 36.06% of value-added tax on petrol alone. Other than that, VAT on diesel is highest in the state of Andhra Pradesh at 28.47%, and then comes Telangana, 25.95% is levied as value-added tax on diesel in this state. And interestingly, if we look around the neighboring states of neighboring countries around India, Pakistan sells their petrol at 50.67 rupees per litre and diesel at 57.06. Bangladesh sells petrol at 68.47 rupees per litre and diesel at 51.75. Sri Lanka at 49.67 rupees per litre for petrol and 40.33 rupees per litre for diesel. Nepal at 66.69 for diesel and 54.73 rupees per litre for diesel. So clearly neighboring countries have cheaper petrol and diesel prices, but considering that OMC's paused on daily revision of petrol and diesel pricing from April 24 to May 13th, now they are putting all the burden on the consumers. We'll have to see who will blink first, if the central government will actually go ahead and do a excise duty cut. Back to you.
Well, absolutely, Anshu. There are three figures to take away, and that is that 19 days of freeze and 9 days after that of constant price hikes, and that's led us to nearly 2 rupees of a jump up there. But the Indian Oil press conference is just about to begin, and we can cut across to that perhaps.
Stand before you and present the performance of the company during the last year, including the financial results which were approved in the today's board meeting. A couple of physical highlights as well as the financial highlights I would like to present before you, and before probably we can go for an open house and question and answer. 2018 had been a wonderful year as far as the physical performance of the company is concerned. I mean, in all the areas of operation, the company did extremely well. We had achieved the highest ever crude throughput in 3 of the major refineries, which is Mathura, Panipat and Paradip, of course. The Cairn crude or the Rajasthan crude processing was also highest during the year, which is again a profitable.
And taking the discussion forward in terms of the energy and fuel prices, we have with us now Virendra Chauhan, oil analyst at Energy Aspects. Virendra, hi, good to have you. It just doesn't stop when it comes to the crude oil price rise. We're just about holding around those $80 per barrel mark. What is your sense on where are we headed from here?
Yeah, I think with the number of geopolitical risks and sustained supply outages, we all know about Venezuela. Iran has obviously popped up since sanctions were reimposed by the U.S. administration. Now there's some challenges resurfacing in Nigeria. And when you look at the inventory situation, which has been tightening for the best part of 12 months now, the market starts paying attention to this. Brent is reflecting this geopolitical risk premium.
Virendra, what is your sense for a country like India, where we, of course, are looking at an all-time high diesel and petrol prices? The government, of course, has been holding a lot of talks internally. There could be perhaps an excise duty, a subsidy, or even a movement, or perhaps more burden for OMCs coming. What is your sense on what the government perhaps should be looking at?
Yeah, I think with the election coming up in 2019, of course, the price that consumers are paying for fuel is a very sensitive issue or topic. And so I think the government will need to take some measures, because otherwise it's going to look very, very challenging. And we saw what happened only last week in Karnataka, and this is obviously something that the situation the government would want to avoid.
How are you looking at the crude oil prices then going forward? Because, of course, we've seen the rupee continue to depreciate as well, and higher crude oil prices, both of them together are a higher pain point right now. But on the crude itself, are you looking at much more gains, or are you looking at consolidation? Do you even see some profit taking from these levels?
Yeah, I think there may be some consolidation in the near term, but if you look at outright supply-demand fundamentals, they do look very, very constructive in the second half of the year. We've got stock draws due to accelerate in Q3 and Q4, which means that the inventory situation is going to get tighter and tighter. Now, whether prices follow that or whether action's been taken, whether it's from GCC members such as Saudi Arabia or Kuwait, UAE, and maybe possibly Russia, remains to be seen. But for now, it's looking like prices may grind higher from this point on.
Any level that you're working with, Virendra, for this quarter or the next, when you say second half is going to be bullish, any levels that you have in mind?
Yeah, I mean, I'd expect we remain in the 80s in the second half of the year, notwithstanding a surprise situation from OPEC members. Now, we don't think this is certainly not our base case. We do expect Russia to raise supplies. We do expect Saudi Arabia to raise supplies from here if the situation in Venezuela, Iran and Nigeria deteriorates. We would expect that to kind of put some downside pressure on prices, but I wouldn't expect we're going back into the 60s or anything like that. I think we're going to remain above $75 or $80 per barrel for the balance of the year.
All right, Virendra, we'll let you go at that. Thank you so much. That clearly is not so good news for the Indian markets, though, if the prices are going to stay around here and continue to be in higher 80s. Ram Pitre as well now joins us to put out some light on the strategies therein. Ram, hi, good to have you. Let's start with the crude oil prices itself. Is 5,000 quite close now?
Manisha, this definitely at the current level will not advise to trade from the long side. I think looks like on international market is $72 and to $73 this band of WTI and the $81 of Brent. I think this somewhere it is a strong resistance area. So it is better to trade from the short side with stick to stop loss and trade from the short side for the good profit. So as of now, I have domestic market, this 49.50 area is a level where you can trade from the short side, stick to stop loss at 5,000 level, but we might see 48, 48 kind of a level. Looks like there is some sort of, from the currency angle, this week looks like there should be some steps RBI will take on rupee depreciation. The rupee might appreciate from here onward, not much, but at least it will stop depreciating from 68 onward.
So what range would you look for rupee in that case?
At the moment, 61.80, 67.50, 67.50, 67.80 is the support area. But if you ask me on a longer terms, it is rupee likely to depreciate. Depreciation is more than the appreciation.
Okay.
The recent low of 68.87 is this is the recent term in the last 2 years low. That can be broken any time if RBI is not taking any step at the present level.
Ram, also, how are you looking at metals as a sector? Because that really seems to be trading quite directionless for the last couple of sessions at least.
It is basically on a week-to-week basis you have to trade because not a correct directional call. You can take it from current level. And looks like some range bound with a slightly bearish bias because of the dollar index, the strength in the dollar index.